Hi, this is Alessio, a Stanley leading trader. Hope you're well. In this video, I'm going to discuss an important question which many people have asked me over the last few days, which is, why am I still bullish on the stock markets? In a previous video, I said that I'm still remaining bullish on the stock markets and potentially new highs will be reached by the end of this year. So why do I have this bullish belief about the stock markets right now? Here's the first reason, probably by far the most important reason. According to data, courtesy of Jason Geppert, the dumb money is right now giving up on the stock market. They're turning against stocks. As this chart shows, look at the red line. The red line shows that the dumb money is turning negative on the stock markets. In fact, their confidence in the stock market rally has shattered over the last few days. As you can probably imagine, as the stock markets have gone down, the dumb money have, of course, become very fearful. And by the way, who is the dumb money? Who are we talking about? We're talking about, of course, your average, uninformed, emotionally driven crowd of people who basically make their decisions not based on any logic or thought, but purely based on their emotions and what the news is telling them and all that kind of stuff. So in other words, again, the dumb money is losing confidence, but the smart money, as shown by the blue line, is gaining confidence. All right, now let's take a look at this chart over here. This is the stock market, the S&P 500, from the 2016 bottom, all right, to where we just were quite recently, the 2018 high. Now, before I show you exactly what this chart means and what I want to bring to your attention here on this chart, let me just step back, go back about 20 years. Now, those of you who are old enough to remember the tech bubble or the dot-com bubble of the late 90s, you probably will remember what happened back then. And by the way, if you don't remember what happened back in the late 90s, well, guess what? This is going to really help you. So back in the late 90s, we had a tremendous rally, especially in the late 90s, in the final year of that bubble. You see, what happened is in 1999, take a look at this. This is January of 1999. The NASDAQ at that point was 2,000. In that year, the NASDAQ doubled, like more than doubled in value. Okay, that is incredible. Nobody could believe it at the time. In fact, let me just say this. Many hedge funds, many of the big funds out there went broke. They became bankrupt because what they thought, let me just show you. A lot of funds back at the time thought that the stock market had peaked in the beginning of 99 or late 98. They thought, you know what, this is it. This is the peak of the market and the markets cannot continue going higher. And what happened is, it did. And as a result, many of these traders and funds that were shorting the stock market, that were betting against the stock market, they went broke and they collapsed. So guys, remember, as the legendary investor Jim Rogers always says, the markets can always go beyond what you can possibly imagine. Now, here's something else you need to pay attention to, which is during this bull run, during this 100% move in the stock markets, you'll notice that it didn't move in a straight line, right? The markets didn't move in a straight line. They went up, sure. But notice that along the way, there were these corrections, these drops, okay? Now, these drops, on average, were about 10 to 14%, okay? These drops you see here. These are on average 10% to 14%. Even this drop you see here, look at this. The market rallied here. Look at this, very strong. Let me just choose a different color. The market's rallied here. But notice that right about here, there's about a 14% drop in the stock markets as we're here, all right? But again, the market showed itself to continue confounding people and, in fact, rallying higher. So let me ask you this question. Who do you think, what kind of people do you think were buying these dips? Who are buying these dips, these corrections? Was it the dumb money or the smart money? The smart money, absolutely. The dumb money were selling. They were getting scared. They were listening to the news and all that kind of stuff. So where do you think the dumb money was buying? The dumb money was buying at the very highs. Whenever the market hit new highs and the news reported it, right? I'm sure you watched the news reports. Oh, the market makes new highs. That's what they were doing. Whereas, of course, the smart money was selling at those highs, but they were buying the corrections. All right. Let's go back to the chart that I showed you a few moments ago. Now, this is the stock market. This is the S&P 500. Notice that from the 2016 bottom to the 2018 high, again, it didn't move in a straight line. Sure, we went higher, but also we had those corrections along the way. These corrections were approximately 5 to 10%. Okay, so again, all these corrections tended to be buying opportunities. All right, even these small ones, which are only about at best 5%. All right, now this recent correction that we've seen here, this recent 2018 correction, which is what I believe it is a correction and I don't believe it's an entry into a bear market. This has actually so far been about 11% correction if you calculate from the highs to the lows. All right. So the fact is, the market has had a significant correction already. Could it go further lower? Sure, of course, anything is possible. But the bottom line we have to appreciate here is this, that these corrections, this is essentially where the smart money tends to buy. The dumb money are too scared to buy. Okay, the dumb money is listening to the news. All right, they're listening to what their friends or people on social media are saying. Of course, they're all pretty much scared, just like they are right now. Most people are looking at the headlines on the news, on the different articles, and they're all pretty much negative and all pretty much doomsday, scary stories and all that kind of stuff. But the fact is, guys, we got to stay with the facts. We got to stay with the trend. And yes, we need to protect ourselves against risk. Risk management is important. So in other words, just to recap, we have 3 reasons to be bullish at the moment on the stock markets. Number 1, let's just recap. The dumb money has been losing confidence in the stock market, a contrarian signal. Number 2, the trend in the stock markets has still been upwards. The trend still remains with the bulls. Thirdly, due to the Elliott wave count. Now, I'll cover the Elliott wave count in another video, but for the moment, we should still remain bullish on the stock markets, unless the facts change. And let's not make the mistake that people made about 20 years ago on the stock market, on the NASDAQ or in the S&P in the late 90s, when they thought that the market had topped, when in fact, it hadn't even started its major move up higher yet. Alright guys, thank you very much for watching this video. If you like this video, then please remember to give it a thumbs up. And if you want to see more videos like this in the future, please remember to subscribe to our channel. You can also find me on my website, which is leadingtrader.com. Thanks very much.